Hello, and welcome to this week's edition of Tax in 10 with me, Rachel de Souza, and Andrew Robbins. We are both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have thoughts on any topics you would like us to cover. You can contact us by email, and our email addresses are at the bottom of your screen. Now, I think it's fair to say that one subject that has dominated the press in recent weeks from a tax point of view, and it is not how many tax returns were filed on Christmas Day, but what on earth is the difference between careless and deliberate behaviour, and also why does it matter? As is often the case with the media, there has been a lot of noise and excitement, but not necessarily a huge amount of understanding. So we thought it would be worthwhile going back to basics and taking a little bit of a look on tax penalties.
So a starting point for this is, I think, the explanation given by Jim Harra, who's the head of HMRC, when he was in front of the Parliamentary Public Accounts Committee. And what he said is quite simply that penalties are not charged for innocent errors.
Okay, so when do you get a penalty then, and how is it calculated?
So the point of a penalty in tax terms is basically to punish the taxpayer for doing something wrong. So that's why Jim Harra talked about innocent mistakes. So, for example, you might submit your tax return based on your genuine belief about how the legislation works to tax sales proceeds. But actually on inquiry, HMRC might determine that under the law, the treatment should have been different. So in a case like that, you got the answer wrong, but it really wasn't your fault. On the other hand, if you forget to include your earnings on your tax return, you've clearly made an error due to not paying enough attention, and you've failed in your reasonable responsibilities. And of course, at the other extreme, you might deliberately misrepresent your tax position or hide money in a number bank account in the Cook Islands to try to evade tax altogether. So clearly, the seriousness of your mistake is very different in those three cases. And the penalty regime is actually designed to take account of that.
Yeah, that's right. So let's have a look at how penalties are actually calculated in practice. So the starting point is that if you get something wrong, you pay a penalty of 100% of the tax at stake. And peculiarly, we then actually work backwards to reduce that figure to get to the actual penalty that will be due, because we look at mitigating factors. So penalties can be reduced by making an unprompted disclosure to HMRC before they come knocking on your door, cooperating with HMRC inquiries to help them work out how much tax is actually due, and providing them with full access to the information they need to complete their work. And in general, HMRC say that after mitigation, if a penalty arises because of a lack of reasonable care, the penalty will be between somewhere between 0% and 30% of the extra tax due. If the error is deliberate, the penalty will be between 20 and 70% of the extra tax due. And if the error is deliberate and concealed, the penalty will be between 30% and 100% of the extra tax due. So based on guidance, if you make an unprompted disclosure of a careless inaccuracy, it is possible for the penalty to be reduced to nil. And in reality, in a lot of cases of unprompted disclosure, penalties end up being about 20% after taking into account things like the amount of tax at stake and the reasons for making the error. For a taxpayer who has deliberately done something wrong, but then has a change of heart and makes an unprompted disclosure, the minimum penalty will be 20%. And if you have deliberately done something wrong and then tried to hide it, the minimum penalty will be 50% of the tax at stake. So you can see just from those numbers how important it is to be the person who volunteers the information to HMRC rather than hoping that they never find out. But that's quite a lot of information above, so let's try and pulling it all together. If you make a genuine mistake and it wasn't your fault, telling HMRC voluntarily about it could well mean you pay no penalty at all. If you make a mistake because you are being careless, so you really should have known better, but you weren't deliberately doing anything wrong, you can expect a moderate penalty. And if you have deliberately tried to mislead HMRC, you need to get in front of them as soon as possible to have any hope of avoiding your penalties, potentially doubling the amount of tax that's due.
Yeah, absolutely. And I should mention that there are other penalty regimes used for specific circumstances. So, for example, if the tax lost relates to offshore matters, penalties can be 200%, not 100%. And while we're talking about sort of the general subject, there are some other issues we should mention as well. The first one being tax avoidance schemes, because tax avoidance schemes and penalties can really vary widely. Actually, in a lot of cases, if you did a scheme relying on professional advice with counsel's opinion and so on, and you then have to settle with HMRC, you may pay no penalty at all, which I know sort of feels a bit counterintuitive, but however aggressive the planning was, HMRC are likely to accept that you were not being careless in following the advice you were given. Of course, if you didn't take proper advice, you can find yourself with a really hefty penalty in those cases. It's also worth saying that in some cases, when you get a penalty from HMRC, you may not actually have to pay it all. Penalties can be suspended in the same way as a prison sentence, dependent on your future good behaviour. To qualify for suspension, the penalty needs to relate to behaviour that can be addressed. So, for example, if you prepare your own tax return and miss off foreign income because you thought you should only be taxed on your UK income, you might be able to get that penalty suspended if you agree to employ a professional tax advisor to prepare your return. You give them direct access to your foreign portfolio. On the other hand, if you do a one-off bespoke structure, which doesn't work properly, you're not likely to be able to suspend that because it's not a repeatable behaviour. In other words, most people don't set up an offshore trust every year.
And finally, it's worth a word about interest as well. HMRC will charge interest on late paid tax. Interest will apply whether you are, say, a month late in paying your tax liability or many years late. Often, HMRC inquiries can take more than a year to reach a conclusion, and the inquiry may relate to a number of earlier tax years. Once agreement has been reached on what tax is due and the penalty that will apply, the final amount the taxpayer will pay to HMRC will be increased by interest calculated at a daily rate on the late paid tax. Now, HMRC publishes its late paid tax rate, and that is base rate plus 2.5%, which today amounts to 6%. And the argument here, of course, is that the taxpayer has had the use of the funds whilst the tax has remained unpaid, and therefore it's only right that HMRC is compensated for not having had the funds when they should have.
Yep. And so, pulling all of that together, we can see the penalty regime is complicated and is heavily influenced by taxpayer behaviour. And that's why a lot of time is spent by people like us sort of determining the type of behaviour and why there's been so much media reporting recently about those words careless and deliberate and what they actually mean. I think standing back, the important thing to remember with all of these rules is that if you have a problem, you need to address it as soon as possible. If you stick your head under the duvet and hope it'll go away, it won't go away, it will get worse. And however painful it might feel, it's better to engage with HMRC up front than just to cross your fingers and wish.
Yeah, of course. And, you know, it goes without saying that if you do things properly in the first place, then you won't suffer a penalty at all.
This is true.
Anyway, moving on from penalties, have you got a recommendation for us this week, Andrew?
Based on listening to an In Our Time program a few weeks ago, it maybe go back and read Persuasion by Jane Austen, which I did at A-level long time ago. And it's a much stranger book than I remember it being. And it's really interesting reading it again now, the different things you pull out of it. Really interesting social commentary, position of women in that sort of early 19th century society. It's quite sort of critical and quite, you know, this was being written at the time. But it's very sharp, very well done, and really, yeah, quite strange and interesting, worth another go.
Oh, okay. I might even give that one a go myself. Right, so thank you for listening. Please do let us have your comments or feedback. And remember, we can be contacted on andrew.robbins@rsmuk.com or rachel.d'souza@rsmuk.com. Anyway, until next time, bye for now.
Bye.